one. And then, good morning. Good morning, everybody. Here. But I'm still getting things together. Maybe I'll join this. We'll go to scene. Maybe I'll join on live here, but I did my taxes yesterday. Not my morning, my full-on taxes. I just uploaded to my morning Wendy, my accountant. What a nightmare, man. Good God. It is just, it's horrible. The tax system in this country is just out of control. Let's go to Seeking Alpha because we do have some breaking news on CPI. Trump says shutdown cut at least 2 points from GDP ahead of fourth quarter read. Whatever. I think GDP, yeah. 1.4%. Below the consensus estimate of 2.8. So slow down. Yeah. I don't think I'm going to go over that. I mean, it is what it is. It's a slowdown. It didn't move the needle. It's not like the market crashed because of it. We can look at what it did to, I mean, it sent, that's 830 right there at 602. You're trading at 601. It may look like a crash. It's not a crash. I mean, it took the indexes down, probably some green to red. Like Shopify, I could see, hey, in a slowdown, that one might be an expensive stock. 123. I still think it gets back up here to this 150 area, 160 area, and bounces off that 170 again until it doesn't. So, but let's see. This was interesting. I'm not going to bring this up, but this was just this is down 50%. Grail. It's biotech. I hate it. I hate biotech. But holy hell, 50% cut when Wall Street, I mean, Wall Street's going to change it, but they're at 114 and the stock is trading at 51. But, excuse me. Ooh. Newmont, they're down 3%. Are the rest of the gold ones down 3%? Let's see. T-Rex Gold, no, that one's kind of up. CDE, it's not down 3%, even though they reported earnings as well. Morning, Josh. New Gold, this is one that, oh, what do you want? Hold on. I gotta take off AI tracking. Then I gotta go handle the dog. What? I'll get your own bed. If you wait around, you don't get a bed. Okay, watch out. There you go. Okay. See, yeah, all you want is that bed. You want to come under here? Okay. Go on, Penny. Good girls. There we go. Okay. We'll turn back on the AI tracking. And I do have a second camera. But this one looks like the dogs are on the other side of the monitor. Just so you know what I'm looking at. I mean, that's my screen. I have this monster in front of me. So, Let's see. We're going to start opening up some of the links that I'm going to go over today. Get ready for 24/7 trading. I hate this, by the way. I hate this, but I scored a 10 out of 10 today. 10 out of 10. I scored a 10 out of 10. So go take the quiz. Mortgage rates are down, which is interesting. But paying off your mortgage early, that's always been a debate. And I have a friend who I retired. In fact, the guy who created the 4-hour algorithm with me, he doesn't have a mortgage, paid off his mortgage early, can't stand mortgage. I was telling him, I think he bought a house in 2021. Maybe it was 2019. It was like 2 point something for mortgages. And data in focus. Yeah. And he wound up buying a house in all cash. Everybody's favorite IPO, Figma. We'll talk about analog devices. I mean, this was one that everybody was looking out for on Wednesday afternoon, and they came in and said, hey, it's a great one. Microsoft, first insider buy since April of last year. ServiceNow, they're buying, insiders are buying. I mean, at some point, insiders buying turns good. I'll talk about my experience with Charles Schwab just recently as last year. Why does this do this to me? I don't understand this. And I'm sure it's going to give me, this is the, this is the one that I want. I don't understand this. You know, every time I grab it from my iPhone, Instagram gives me the wrong freaking link. And let's see if this is right. This is The Verge. Yeah, this one's right. So that's weird. This is The Verge. Open Door, everybody's favorite meme and pump stock, is up 16%. I mean, you know, that $5 mark, we'll look at that mark and we'll ask Sidekick about that. Lemonade, which is just a rinse and repeat. This one you could trade a long way. This was up 14 or 15%, and it gave it all back. It gave it all back. I mean, it gave it all back. So, Tesla, listen, they're going to sell cyber cabs for under $30,000 by the end of the year. Marquez Brownlee is going to have to shave his head. Walmart. We'll talk about Walmart because Walmart's an interesting one. It's kind of just fluttering, even though their earnings were really good. This is kind of tells the story of the year. It's XMAG, which is the S&P 500 minus Mag 7 versus the Mag 7. Year to date, I mean, it just clearly diverges. This was interesting. Seasonality, when you get your tax refund, talking about taxes, when you get your tax refund, people pour money into the market with their refund. This is a great scene from The Big Short. Is Blue Owl telling us that it's an issue? So I had Perplexity look at the market right now. I also had Perplexity, and we'll look at a paid member asked me to look at AppLovin. And I didn't. Sidekick brought this up and said AppLovin is working with OpenAI potentially, and that's what's moving the market. Wendy's was just this is an example of, oh my God, is it too low? This Finding opportunity in uncertain markets. This is from October. They dive into Alpha Picks. Alpha Picks rules-based strategy, which has historically delivered significant. I mean, we're going to talk about that one. Open with, let's see if this opens. Yes. Yes. Oof. That is the Alpha Picks rules. So we'll talk about that. We'll talk about the February watch list. And let's go back here to QQQ. I wonder if I should bring this up or not, but what the hell? There's not much green in the market. You got Amazon at 205, which I think is a generational buy potentially, but you might have to wait 3 or 4 years. QQQ is just within that range. Got a buy yesterday at 602. You're trading what, under 600 right now? Right at 600. So, let me take a sip of water. Okay. I'm going to start recording now. Good morning. It is Friday, February 20th. And if you didn't know, by the way, if we look at a weekly chart of last year, you can see, when did we really hit the peak? It was February 17th. So if you're assuming that the Iran conflict, the government shutdown, the Supreme Court decision, the royal family getting arrested over the Epstein file while nobody in this country has been arrested over the Epstein files, and have you seen the Dow? Have you seen the Dow? We're gonna go over all that stuff. The February watch list that I published, Alpha Picks. We'll go over the rules, how to determine what the rules are. Well, I'll give you, even if you're not an Alpha Picks subscriber, how to determine the rules. I talked about market sentiment. We will bring that up in relation to AppLovin, which most people know I got out of. We will bring up earnings because that's what's basically driving the market. The stock. What's the stock of the year? What's the stock? Have you said thank you? What's the stock of the year? CEOs are buying their stock back. Which ones? Everyone's favorite IPO. Remember what everyone was looking from Analog Devices, which reported on Wednesday afternoon. Will the AI spend continue? Well, it did. Want to know what to buy the dip on? I got a few ideas. And if you like dividends, we got a bunch of dividend payers that are actually not only appreciating by 10% or more, but they have more than the 5% dividend. I got a 10 out of 10 on the weekly quiz from Seeking Alpha. And get ready for 24/7 trading. And I will give you a fire tip: financial independence, retire early based on your mortgage payment. So let's talk about this. The market, again, QQQ, we've seen it. We have literally seen it since October. Hit that 638. We hit it here, February 2nd. The high, 629. So you've seen it go up to this point, and you're seeing it, that green line. It is anchored at the COVID low, right at the 200 weekly moving average. We're nowhere near the 200 weekly moving average. We are nowhere near the 50-week moving average. So that trend line, it stays true. And I have this note up for a very long time. The indicators seem stretched on this weekly chart, but you're in a bull market until you're not. Is this the end of the bull market? Probably not. But that MACD isn't going down anytime quickly. We're trading sideways. And as you trade sideways, the indicators don't crash. The indicators crash like they did last year. So if we are to see us go down to this 50, when are you buying? That's the biggest thing. And what are you buying? Because the February watch list, it includes a stock. I gave this, if you're at the Daily Stock Pick newsletter, right there, and you go to the paid section because it's for paid subscribers. But the February watch list right here includes a stock that I had at the beginning of the month. I had added in January. I included that, added it. I sold it. I took a 30% gain in about a month. It includes a top 2026 stock that I chose to include. That's up 6% in just this month. There's only 1 out of 8 stocks that has lost month to date. And if you purchased 1 share of each of these February 2026 stocks in the watch list, you're up 5.75%. Not to say it's going to end the month there, but in a market like we have today, which is completely sideways for the most part, that's not a bad 3-week trend right there. And paid members, I did buy a stock in the trading portfolio. If you go over here to Savvy Trader, okay, and you just go to Linktree and click down here on Savvy Trader, you can follow all my trades. This leads you to the core portfolio. But I have a bunch of other portfolios. Okay, I have these 2026, the AI created portfolio to beat the S&P. To beat the S&P 2026 portfolio, and I have this trading portfolio right here. All of these portfolios, the core portfolio is free. All these others, 1, 2, 3, 4, they're $300 a year. That's $1,200. You can get it for free if you sign up for the paid newsletter. And I did buy a stock on February 13th. The reason I believe in this one long term, it is a significantly volatile stock. It is up 11% since I put it in this trading portfolio. I think it can go much higher, but it's volatile. I am down on some of my previous positions in this, but I just included it in that portfolio. If you want to know what it is and you're a paid member, ask about it in office hours. Every Tuesday I hold office hours, so ask about it then. So again, paid members, you get all of that stuff. And I wanted to talk about using the tools that you have, because one of the, I bring up Alpha Picks all the time, and I get emails constantly. What do I do with Alpha Picks? What are the rules around Alpha Picks? What should I do? Well, I'm not going to me, because I'm just an affiliate, FYI. I put my money into Alpha Picks because it's worked for me. And yes, I was a paying customer before I became an affiliate. And I've tried many different ways of doing this. My way is not always the right way. But let's talk about it, because you hear me say it's a rules-based portfolio. Well, I just went and asked Google, what are the Alpha Picks portfolio rules for investing? It's a rules-based portfolio, so you list the rules for buying. The number of days it's a strong buy in the quant, the rules for selling, like when it's a hold in the quant. Be specific and list all of them. Google lists them, the buy rules. It's quant rating, strong buy. The country, it's in the U.S. Listing, it must be traded on the major U.S. Stock market. Market cap, greater than 500 million. Stock price, the share price must be greater than $10. Frequency, 2 new Alpha Picks are typically released every month on the 1st and 15th or the closest trading days to those afterwards. Exclusion, the portfolio excludes real estate. It doesn't do REITs. The sell, simple. The hold rule, if a quant's rating falls to hold and it's not automatic sell, Alpha Picks will continue to hold rating the stock as fundamentals remain decent. Again, 180-day rule. The sell rule, a stock is sold if the quant rating drops to a sell or a strong sell. M&A activity, if a company is involved in merger or acquisition or is a target, it is typically sold. Significant rating drop. If a stock drops from a strong buy directly to a strong sell, it is removed immediately. The portfolio management, position sizing. New picks are typically allocated as a fixed dollar amount, equal weighting at the time of entry. You can add $1,000 if you want. I choose 1%. That's my rule. Rebalancing. The portfolio does not rebalance weightings. They let winners grow to become a larger percentage of the portfolio. They do cut it at 10%, by the way. Dividends are not reinvested into the specific stock. They are held as cash until the new buy recommendation is made. It is very, very simple. And again, the results speak for itself. 296% during the same time period. The S&P was up 80%. So it's a simple formula. Again, a point of mine to use the tools at your disposal. Don't go and ask somebody. Go and ask Google. Go and ask Gemini. Go and ask OpenAI. Whatever you use. Anyone who would ask the question, what are the rules? Can you give me advice? I can't. I'm not a financial advisor. Go and ask a qualified financial advisor. Go and ask Seeking Alpha if you have questions about it. They have a feedback loop. But again, using the links in this particular answer, it guided me to this: finding opportunities in uncertain markets with Alpha Picks. This is from October 13th of last year. It is Steve Kress and Emma Johnson diving into the rules-based strategy of Alpha Picks. You want to know about it and you have Seeking Alpha, you can literally, if you don't have Seeking Alpha, get a free 7-day trial. Again, everything's on Linktree. I took you there to get to Savvy Trader. If you go to this top fourth link, you get a free 7-day trial. You can watch this video. It is 54 minutes long? Again, it is a rules-based strategy. These are two of the people that make this Alpha Picks selection. Okay? And let's go over market sentiment. Okay? I really want to go over this because I talked about market sentiment on Wednesday. And if you didn't know, again, the newsletter's free, Sentiment, Strong Buys, and AI Deals. This is where I talk about market sentiment. I want to talk about Wendy's. Because you look at a company like Wendy's, okay? People bought the dip on Wednesday. The stock was up over 20% on news that an activist investor, Nelson Peltz, he was the one that drove Disney higher to 120, and then he got out. But I want to show you a chart of Wendy's. Now, I love a Dave Single. I'm a fan of Dave Single. A chocolate frosty from time to time. I love their chocolate frosties. But I want you to take a look at this stock because this is when market sentiment changes. I would be buying Wendy's stock just based on the food, but it's clear it is not a well-run company. This goes all the way back to prices that you had in 2014. It's trading at $8. But again, it was up. You could trade this one. But I don't need to bottom fish this. And when I talk about bottom fishing, where would I have gotten out here? I probably would have gotten out the second this golden death cross, the death cross happened, where the 50-day on a weekly crosses the 200-day. It's a 200 week. I just call it day, but it's a weekly. Okay. I probably would have gotten out there and said, you know what? At $19, I don't need to be in this. Everything's moving downward. And would I have gotten in here where it was trading at 17 and spiked all the way to 20? Probably not. Just like this week, I'm not taking this 11% move in the stock or 20% move where it bounced off the lows. I'm not taking that and going at it. Again, I use weekly or monthly candles. You want to know what I look at with Apple? I look at a monthly candle of Apple and I say, okay, at $280, I'm okay trimming. You want to know why? The all-time high, it's 288. That monthly chart looks damn good. That still looks bullish. We will bring this one up later. But Wendy's, it's just a news event. It is still a sell in the quant, and you can see it. Even though it moved up, it's a sell. Why? Because it got more expensive. And people, the revisions, they're all bringing it down. So it's not a reason to get into the stock just because it pumps. In comparison, I want to bring up a stock that I sold at $370. Okay. This one, AppLovin, I trimmed it at $370. Why? Because it's software. I didn't like this one. Now, if we go and look at APP, it is a hold in the quant. It was recently a buy and a strong buy. But then after earnings, it got a hold. So I had a paid member reach out to me yesterday. And yes, I will answer any question that paid subscribers ask me. And he said, hey, can you do me a favor and ask Sidekick what it thinks about AppLovin? And I said, you know what? I'd be happy to, because I asked AppLovin, can you do a full Wall Street style analysis of APP before their earnings? What price should I pay? Are there any chart issues with the stock right now? Well, it gave me the advice, and you can see how much it did. Final answer, fair value 450 to 500. Where to buy? 380 to 420. And FYI, if we look at post earnings, where did it bounce off of? It's high right here, 380. It went down to 350, but you can see that candle right there. Okay, 380 was the high on February 13th. It bounced off there. It's trading at 412. And so this particular subscriber wanted me to ask, hey, I'll just follow up on this one. Can you do a post-earnings analysis for me? Include the most recent price action. Tell me if I should buy. And again, I didn't use, this is just simple English language. I'm just asking it a question. Include any sentiment the market has been identifying as bullish or bearish and provide some support and resistance. Again, I am using the tools at my disposal. So what did it say? The brutal truth, stay away from this surge. You asked the right question. Here's your answer. Do not buy this surge. This is a classic bear trap forming after a disastrous earnings reaction. Let me break down exactly what happened and why this rebound is dangerous. And you can ask Sidekick all of this. I will go to the end with the final verdict. My recommendation, do not buy. Dead cat bounce, dead cat bounce psychology. Stock crashed 20% in one day, bounced 14% over the next 5 days. This is normal mean reversion, not a trend reversal. What should I do instead? If you own it, sell the rallies into 420 and 430. Where are we right now? We're at 424. It's up 2.5%. I'm going to continue to trim until I get to a weighting in the Alpha Picks portfolio that I'm happy with. If you want to buy it, wait for 360 to 375. That's going to be a retest of those lows. And then I don't do short, so I could care less about that. Price targets and timelines. Bearish scenario, 60% probability. Near term fades from 412 to 380 to 390 within 2 weeks. Retest returns to 360. Now, does it know for sure? No. It's taking all of its stock market knowledge like it's an expert investor and saying, here you go. Here's the likelihood of what's going to happen based on me knowing the market. And the final verdict, current price 412, earnings, post-earnings low, 359, pre-earnings 457. It was 457 before the earnings. Do not buy this. And I found this one interesting. Rally is rumor-based. It's open AI speculation, not fundamental. I didn't know about this. I had no idea that AppLovin and OpenAI were talked about. So again, using the tools that I have in front of me, I went to Perplexity and I said, is there a rumor about AppLovin and OpenAI? Can you find anything about it on social media? Yes, there is an active, unconfirmed social media chatter that AppLovin is working with OpenAI. A Benzinga piece notes that AppLovin spiked after hours on February 19th, which was yesterday, specifically as rumors circulate on social media that the company is working with OpenAI. The same report says, posts on X claim OpenAI mentioned on a capital raise call that it has started working with AppLovin to monetize ChatGPT through ads. Boy, that's billions of users. That would be enormous. And so in that standpoint, Sidekick would be wrong. Now, I'm a big believer in this stock. I like this one. AppLovin, if you didn't know, they place ads into video games and others. It's an ad platform. This is a fantastically strong stock. And if you look at this one, again, if we just look at the performance, you can see 5 years. Let's see, why is this not showing up? Oh, it's not even 5 years old. 1 year, you're down 16%. Year to date, you're down 38%. But in my portfolio in Alpha Picks, I'm up because you're a 3 year. We can do charting. Let's see. Let's see if it does 3 years. 3 years, 2,801% over 3 years. And yes, it's pulling back. That is not an upward trend. That is absolutely not an upward trend. So again, could this bounce more? Yes. Could a Sidekick be wrong? Yes. So let's talk about earnings because that's what's pushing the market forward. That's why you haven't seen a total crash of the market. One day does not make a big market swing. Again, we can go over to VOO and we can look at it, it's trading sideways since October. Everything is trading sideways since October. And we will go over some charts in a little bit, the Mag 7 versus the Unmag 7. But one day does not make a market swings. There have been some big moves. So understand, even if you're going down, it's a slow grind down because we've had this strong move up last year. The biggest gainer on the Wednesday's S&P was a company called GPN. And I didn't look yesterday, man. I can go to FinViz. You can go to FinViz and use the screener. And this is how I find out the biggest ones. I just go index, S&P, and then I sort it by the percentage change. The biggest mover, Omicron, Deere, which, by the way, again, people that make stuff that is that you can hold in your hand. Occidental Petroleum up 10%. TPL, Texas Pacific Land, up 10%. Again, that's how you find it. But this is interesting because it's been a loser. If we go and look at GPN here, is it a strong stock? Well, let's look at it. From a standpoint of Quant, it's a hold. But the Seeking Alpha analysts love this one. They have a 5.0 score on this one. This is GPN. This is a transaction and payment processing service. And you can see this most recent buy here. This was published February 18th, so it was published 2 days ago. It's down 1.2%. This one was published on the 18th after it, and they're posting strong buys. And this one that was posted, February 4th with a strong buy, they're up 13%. So if you listen to the Seeking Alpha analyst, you're up, strong buy, up. This one's strong buy, it's down 5%. But again, is this one that I would go into? No, I would probably look at ones that had a strong buy like Corpay. Okay, this one, year to date, Corpay, it's up 15%. It's a strong buy in the Quant, strong buy from Seeking Alpha analysts, and it's a buy from Wall Street, 10% upside to 384. So I would use the tools in front of me. But I wanted to ask an AI. I said, let me take a look at the market. So I prompted the AI, can you analyze the most recent earnings period for the S&P of the companies that have reported earnings in the S&P? How many have beaten earnings per share and revenue expectations and guided higher? Act as a Wall Street analyst and give me the information like I am 15 years old. I would like to know the trailing PE of the S&P as of today. Here's the big picture. Wall Street analyst translated for a 15-year-old. We're in Q4 2025 reporting season. Companies reporting from January to February. Most S&P 500 names have already reported, with 74% of the S&P companies, roughly 74% have beaten earnings per share. 73% have beaten revenue estimates. This is a very typical good season. Historically, around 2/3 beat estimates. So we're a bit above long-term norms. How many are guiding higher? Ahead of Q4, 50 of the 107 S&P companies that gave guidance were positive. The 47% positive guidance shared is above the 5-year trend of 42%. So it's a better than expected earnings period. Earnings growth going forward. Blended earnings growth is running around low double digits, with one snapshot putting it around 13%. Valuation trailing and PE. As of this week, the trailing PE on the S&P 500 is 27.5. That's 53% above its long-term historical average and about 20% above the 30-year average. The forward PE is around 22 to 24 times earnings, depending on the source and the exact window. Plain English, the market's expensive versus history. To earn these valuations, companies must deliver on strong earnings growth that's being penciled in. If earnings disappoint, the risk is multiple compression. So again, you have to know how to interpret this. It's clear the market is priced for perfection. We haven't moved the needle since October. And if this year is like last year, like I just showed you on the chart of QQQ, you're likely to see a pullback. So the goal is not to make sure, the goal is not to, buy the dip on every stock. It's to buy the dip on healthy stock. because there could be a canary in the coal mine right now. And this particular tweet shows it. And Guy Adami says he's right on par. This is a scene from The Big Short. Okay, the Big Short, if you didn't know, it's a movie about the housing crisis in 2007, 2008. And this was where they found out, oh shit, we've been right for the past 2 years. Again, market sentiment can hold this market up longer than a fraud like the mortgage crisis. And this particular tweet is saying what you saw with Bulu Al Capital and all of the private funded capital this week could be the canary in the coal mine. And Guy Adami's green. Now, understand that Guy Adami is a huge bear, and for the last 5 years has been pushing a bear thesis. And you might actually see a little pop. If you're a believer in seasonality, you could see a pop here coming into the market. Why? Because it's tax season. And you could see a huge amount of capital coming out of taxes with the refunds into the market, which would, again, push us up. So if you believe in seasonality, that's the thing that, again, Trendspider has a tool for it. Let's look at QQQ. Let's look at a weekly chart, week of the year, and we can go all the way back. Let's go back to, 10 years ago, January 2020, 10 years. Look, where are we right now? Let's see. You are in the 8th week of the year. We could see a spike next week, but then you go down. See a spike. The best week, the 13th week right here. 70% of all 13 changes, the change was positive. What's the mean? 1.48%. What would I do? Buy TQQ during that, a triple leverage DTF. Maybe it's a good one. Maybe you want to use a strategy. Okay? Now, I want to take a look at what's holding this market up. Why are we going sideways? Because you may be, I'm invested in the Mag 7. My portfolio is not going sideways. It's actually going down. Well, here you go. So XMAG, that's the symbol for the Defiance Large Cap X Mag 7. So it takes the Mag 7 out of the S&P. Okay? MAGS is an equal weighted of the Mag 7. Look at the year to date. Mag 7 down 6.63. Minus the Mag 7, it is up 2.9. There's your difference. 40% of the S&P 500 weighted is the Mag 7. So this 6.63 down weighs more heavily on the market, but that up, that's holding the market up. And I'm going to bring up something, Walmart. I brought up Walmart last Friday, I think, where I started trimming it. We can go and look at the chart. Okay, Walmart had their earnings this week on Wednesday. You can see the top right there. I just so happened to sell at about 130. And was it a good one? Yeah. I didn't want to go into earnings with the valuation of this. Walmart turns lower after profit outlook overshadows solid holiday quarter. Walmart is trading, let's go and look at the valuation. The valuation is an F. It is trading at 42 times forward earnings. Every other factor score is good. I don't want it. I don't want a retail store at 42 times forward earnings. It's too expensive. Earnings outlook or not, it's just wise to take profits when you hit all-time highs and you start to see it. Again, this candle lost confirmation. Confirmation is a big thing for me. I started selling. Even with that, by the way, when you look at a daily, this stock, I mean, it was down, down yesterday after its earnings, but it went up. If we just look at a 5-minute on this one, you can see it opened up. It's interesting because they still don't want to buy a retail stock 40. I don't want to buy it at 42 times. By the way, the Wall Street price target, if we were just to look at it, Wall Street's saying strong buy, but it's only 6% upside. I can find 100 other stocks that I'd rather buy than Walmart, even though Walmart may be the greatest stock. I just don't want it at that valuation. It just doesn't seem good to me. And again, Walmart adds market share with upper income customers. I am one of those upper income customers that goes and shops at Walmart. I get my groceries there, but I don't buy anything else at Walmart. Prescriptions and stuff like that. Yeah, I do that. But let's talk about Tesla, because Tesla, one of the Mag 7, failed all-time breakout. Don't look out below. Here's the shoulder. Here's the neckline. Okay. Could you get a head and shoulder patterns here? That might be a long way down to 200. Tesla, they just announced they will be selling cybercabs to consumers by the end of the year for under $30,000. Marquez Brownlee will have to shave his head. Go and look that one up. But Tesla, do I want this one? Well, on a weekly chart, we've just hit the 414. What's happened the last few times we've hit that? Let's see. 2021, you rejected off it. You went down to below $100. And then in 2024, you get back there. You went down to just above $200. December 2025, you get back above that, and now we're on our way down. What happens? Rinse and repeat. A particular stock that I like to trade is Lemonade. This one was amazing because, they had really impressive earnings. They outlined 32% Q1 and full year growth target as autonomous car insurance drives strategic expansion. And I want to show you the chart on this one because this is one with a high beta score. And we're going to go look at a 5-minute chart. Let's look at the after hours. This one popped on earnings. See how far it went up? I mean, let's see. This one on earnings, 15%. Market opens, drops immediately. Why? Because it's expensive. It's expensive. They're not making money. Now, the growth is fantastic, but their profitability sucks. Again, holding good quality stocks in a market like this is key. One that's doing actually better is Opendoor. This is the YOLO trade of the year, Opendoor. Just imagine when Drake actually buys this stock. This is up 13%. Why? They actually showed great earnings as the transformation is in process. A new CEO. Again, this is one that I need to get back into. I will wait for it back under 5. I can even have Sidekick. You know what? I can have Sidekick. Let's see. Let's just take this earnings, this announcement right here that I did for AppLovin, which I'm following 100%. And let's just take that. We'll go to new chat and I will put it in here and we'll change it back to open instead of, can you do a post analysis for me on open? Hold on, I gotta go see if I can sign for this package. I'll be right back. Oh, Oh. Okay, hold on. I got to get back to the... Whew. You saw me walking out. Let me just text my neighbor. Okay. And I'm on Do Not Disturb, so we'll take that to their house afterwards. Boom, boom, boom. Okay, let me get back to... Okay. So while I was picking up a package at my neighbor's house, Trendspider, they did an analysis. Should you buy this surge? My take: stay away from use tight stops if you're already in. The guidance misnegates the earnings beat. You're chasing a gap up that's already losing steam. Downtrend remains intact. RSI on your chart shows oversold. MACD remains in bearish territory despite the pop. Insider selling by CFO right before earnings is a red flag. It tells you don't buy open. You're not buying open for anything other. I will contemplate buying this again under $5. That's what I want to do. Why? The 4-hour algorithm actually makes me good money. 50% versus 39%, including this massive run up here from, let's see, 52 cents all the way up 220% and then a 230%. If we're likely to get that again, I want that. And again, in an open door, in a transformation. I like it. I like it. And what's my YOLO trade of this time? Well, here The Verge kind of brings this up. Okay. RAM shortage is getting worse. The Verge, it's a tech podcast. They're warning folks now about memory. It's made it to its mainstream. This is like Bitcoin in January 2025. It's like gold and silver all throughout last year. Memory is sold out for 2026. I'm pinning my hopes on Micron, SanDisk, Western Digital. Again, I use Sidekick to actually look at those, but I've been talking about these since August. Okay, SanDisk was at $91 back in August, where I bought it here. I sold it up here. I sold it. I never got back in. Full disclosure, I'm an asshole. Again, I'm the asshat that did this. But I've had this in the watch list since August. Since August, it's been in there. And I've got an alert to buy it. I will be buying based on Sidekick's suggestion. And that's it. I mean, when it makes it into, The Verge is basically saying, hey, companies are saying we may not make products now based on the memory price. They can't get their hands on memory. And if you're interested in why I like these stocks, go to Amazon. Look up SanDisk memory card, okay? Micro SD cards. Go and check the 90-day price history. They have doubled in 90 days. So again, do I think this one has more room to run? I think so. SNDK, we can go and look at it. It's a strong buy in the Quant, 4.99. Now, it just got its Quant listing, and it was a hold valuation here where it spiked up. It's trading at $616 right now. Do I want it at $616? No. Sidekick told me where to buy it. I am perfectly happy buying it there. You want Sidekick? Go and get a 2-week trial of Trendspider for, I think they have it for $9. It's the President's Day sale. It's still going on. It's only for another couple of days. Go and get a 2-week trial. Go and use Sidekick. Ask it where to buy some of these. Because I'll tell you, the one that I own a bunch of, Josh Brown is calling the stock of the year. If you're paying 53 times forward earnings for Costco, then why not buy Apple at 30 times forward earnings? You can see it right here. PE forward, 30 times forward. If you're buying Costco at 45 times forward earnings, Apple is a steal. And Josh Brown is making his point. For anybody that doesn't know, for an AI product, consumer product like OpenAI to actually start charging in the App Store, they're paying Apple 30%. So whether they get Siri right or not, and I think that they will, they may delay it again. But Apple, it is my biggest holding in my portfolio. It's 50% of my holding. Now, CEOs, they sell for a multiple of reasons. They need a pool in the backyard. They need a new $500,000 Maserati, whatever. They buy for one reason, because they think that their stock is underpriced. Bill McDermott of the CEO of ServiceNow, he's placing a buy, as are a bunch of others. Now, McDermott is going to buy $3 million of common stock. That's like you buying the Trendspider 2-week trial for $12. Again, it's not a huge outlay of money, but he thinks, hey, we could go up. CEOs buy for one reason. And I'll give you for instance, Schwab. I think I may still have this marked on the weekly. I don't know. Schwab, their CEO bought during the banking crisis of 2023. It was at $50 a share. Okay. It was right around this time. It went down to about $38 per share. I think I bought at $45. I wanted to buy at a price that was lower than what the CEO buys. You can ask Sidekick to place the CEO purchases on your chart. You can even go here to Schwab and you can see any insider stuff. We can go here, and I think there's insider sellings down here somewhere. Valuation, profitability, dividend, insider buying and selling. There you go. If you go back a little bit more than the CEO purchased, we can go. No, that's just left, right. So they don't have it. But the CEO, I'm telling you, back in 2023, he bought, I bought. That's just an example. Okay. And another one that's buying, not just ServiceNow, it's Microsoft. Director buys 2 million shares. Where I like to find insider buys is FinViz. We can go and look at Schwab. Let's see if they have the insider buys. Down here, let's see. Charles Schwab, that's all sales. Where's the green on this one? Yeah, they don't have it going back to 2023. But we can go with Microsoft. And we can go to the insider buys right there. Director Stanton buys $2 million worth. $2 million worth. We can see how many, has he sold? No, he's been optioning the exercise he's been buying. He's bullish on Microsoft stock. They buy for one reason. They think it's going to go up. They're not hedging. They buy for one reason. And Microsoft, yeah, he's buying it. And remember on Wednesday, I said, hey, analog devices, this may be one that tells us, are they still spending on the AI trade? Well, yeah, they are. Analog devices signals 20% sequential industrial growth for Q2 amid AI-driven strength and pricing action. Now, what did this do? It's up 0.58% today. But over 5 days, this one's up 3%. Not a bad gig right after earnings. And again, I like this one. Everybody asked me about IPOs. Figma. Okay. Figma was up 16% on their earnings. Sounds great. Figma, not covered by the Quant. Want to know why? Because it's still considered an IPO. I think it came out April of last year. Let's see. Yeah, July. And you can see on this particular chart, I mean, we can go look at it in Trendspider, but on this particular chart, it opened up at 33, but you had to be an insider to get at 33. By the time it made it to market, it was up here at 115. It's 52-week range. It pumped all the way to 142. And people felt like billionaires. It's trading at 26. 26. It's under $30. Wall Street thinks that it's a $46 stock. They have 10 analysts that cover this one. 10 analysts. Seeking Alpha analysts are like, it's software. What do I want in a software stock? Nothing. I don't want anything to do with software. Personally, I don't either. What am I buying the dip on? Well, I'm buying more gold and silver. even better, I'm buying the miners. We know from Alpha Picks that miners are like a leveraged bet on gold and silver. And I think with Iran, with the price of oil and gas going up, gold and silver are going to be big. I like this. I like it to go further. Gold and silver prices rebound. Geopolitical fears. Gold and silver, little change as geopolitics, upcoming U.S. inflation data. By the way, inflation came in. Inflation is rising. So what do you do with your money? Well, maybe you want a dividend stock. Dividend power plays, 10 large large cap stocks delivering 5% yields and 10% returns. There's a list of 10 of these that are up anywhere from 30% down to 10%, 14%. And they're giving you a 5% dividend yield. You want that one? I'll give you my play in this pick. It's MPLX, energy stock. I love this stock. Yes, it's a hold in the quant. I don't think it was a buyback here at 54. It's trading at 57. This most likely will be a $60 stock at some point in time. And the greatest part about this is the dividend. Dividend yield going forward, 7.52%. It has been paying a dividend for a very long time. And I've had this since 2020. We can look at this price and dividend history. Again, you can see all the dividends that it's paid. It's been a fantastic investment. If we go and look at the metrics and we look at performance and we go to total return, because that includes the dividend, and I'm going to select symbols. I'm going to put in VOO and I'm going to put in QQQ because I want you to compare the return of this stock with its dividend to that. 1 year, you're up 15% with your 7% dividend. That's fantastic. 3 years, you're up 111% with your 7% dividend. That's fantastic because look, you've got 108 in QQQ. 5 years, you're up 266% with your 7% dividend. Am I loaded into this one? No, it is not a top stock. It is just one that continues to compound for me. It's the eighth wonder of the world is compounding. It is a great one. So what's the best rate of return? Well, I'll tell you. If you listen to Dave Ramsey, he says you should have no debt and you should absolutely pay off your mortgage. No debt is the way to go. Bullshit. Bullshit. He also clickbaits people and tells people that the average stock market return is 10% annual. So you should just hold an index. Well, I don't know about you, but it's been between 7 and 8% for me with VOO. So he clickbaits people. So Ben on today's A Wealth of Common Sense makes and it's on the Compound and Friends. Again, should you pay off your mortgage? And he had Claude write him a calculator, an interest calculator. And he kind of does the math and he says, hey, anywhere between 4 and 7%, 6%, 4 and 5%, I think he said, don't pay off your mortgage. Don't pay it off. You know, anything around 7 or 8%, he said, yeah, you want to probably pay off because the risk reward, if you're paying off your high debt, your risk is zero because your risk actually is taken out because you're no longer paying that high debt. It's personal. This decision is 100% personal. It is not something that anybody else will guide you, but I will give you my thoughts on it. I have a 4.5% 30-year mortgage. I've been in this house for 13 years now, okay? So I've got 17 years left to go. At 4.5%, I am pretty sure that I can average more than 5% in simply VOO. So what I've done is I've taken the amount of my mortgage out of my personal portfolio, and I actually invest in a short-term lending program where I give it to real estate rehabbers, and they pay me 15%. Okay, so I get the 4.5% that I'm paying is paid back to me in 15%. Again, you may not be able to find these people to do the short-term lending. I just so happen to have that as a personal investment. But that's what I do. Again, if you can find something that pays you more than your mortgage, you're basically playing with house money. There is no need to take money out of the market and put it into your mortgage, but you have to do the math for you. And if you think that I'm a genius, well, yeah, I got 10 out of 10 on the investment quiz this week. And I want to tell you, I'm scared to death of this. CME's latest 24/7 move may hasten an end to closing bell. I am scared to death of this because I don't think I used to like waking up, and I may get into this mood again. I used to like waking up at 6 o'clock in the morning, 5 or 6 o'clock in the morning, hop on to Trendspider, go to my market scanner and scan for the stocks that are bullish in the core portfolio or my watch list. And you can see Google has an entry right now. We can go to the strategy tester. Google has a 4-hour entry. It will trigger today, probably in the afternoon candle. I will get an alert. MACD below the oscillator, RSI coming off of 28. It is incredibly oversold, and it's bouncing off that 200-day. Now, on your daily, you haven't gotten to the 200-day. You're just under there. You don't have confirmation. Will you get confirmation? This is still in an upward trend. This is a healthy pullback. Go to a weekly, and you're still extended significantly. So do I want to buy this at 310? If I'm looking to add to my position, absolutely I want to get there. But if you get 24/7, good God, these candles become different. And it's hard. And I don't enjoy that type of 24/7 trading. So again, if you are interested in seeking alpha, I tell you, seeking alpha, you saw me use the Quant. You saw me use Alpha Picks. I constantly put money into Alpha Picks. And the bundle here, it saves you over 150%. You go to my link tree right there, click on that bundle deal. Trendspider, you saw me use Sidekick. I will continue to use Sidekick on every purchase that I make. And if you're a paid member of the newsletter, here, you can simply message me and say, hey, what does Sidekick think of this? I will do it for you. You know, I have a certain number of messages that I can go through for paying members. If you want me to do a deep dive on a stock, I absolutely will give you my ideas. So if you have any questions, again, even Linktree has my email address. But Trendspider, get that deal. 2-week trial. Premium and Alpha Picks, this is a limited time deal. It's down, saving you $150. Alpha Picks, again, data-driven portfolio. Seeking Alpha Premium is the greatest 7-day free trial. And if you want the Pro Quant, again, I have the Pro Quant. I use that as ideas because it's an equal-weighted portfolio. I don't typically like equal-weighted portfolios. So if you have any questions, again, Linktree has my email address. I'll talk to you Monday. Have a great weekend. Bye. Good morning, Carrie. Oh, let's open this up. And I have got to, let's see. Open up a desktop. This is the first one. And then the second one. And let's see. We're going to, oh, come on. So I don't look green. There we go. Let's expand that out. And we're going to copy and then paste all adjustments. There we go. And do can you do a post analysis for me on open? So while I was picking up a package at my neighbor's house, there we go. Okay, and throw in these. Oh. That was a long episode. I think it was a long episode. Anybody still here? I think some people may have left when I jumped out. But that's what happens when you're recording live. Fuck it, we'll do it live. Okay, we're gonna go do a thumbnail. And let's put in the title here. YouTube thumbnail. Market crash. Look at that dude's face on market crash. I don't know, what thumbnails have I used? Let's see. No. Let's use. Yeah, let's do this. Oh, whoa. Whoa. Okay. Uploads. We're going to go to the bottom here. There we go. And maybe we'll include an old school. Let's see which. We'll use this. Let's see. I didn't hear that anybody was still here. So maybe everybody's gone. Seeking alpha. We'll put this down here. And Trendspider. let's see. Uploads. I'm pretty sure I had an Alpha Picks. There we go. Oh, is there a new one up here? No, I guess not. We're gonna edit, and then I think there's a image upscaler. There we go. 16 times. Replace. Okay, come on. Is that upscaled? I guess it is. There we go. That's good enough. Download. And we will go to Spotfiy. I don't think I have. Let's see. Oh, come on. Don't crash on me. Hey, Hunter. Happy Friday. Let's see. Did this finish? iMovie is not done yet, so let's resize this to Instagram. Open Instagram post, and we'll do that. Group. And forward. We're just going to remove that. Oh, yeah, we'll remove this. Remove that. Put that, there we go. And we'll close that down. And the podcast is almost done. Oh, let's see. I bet my portfolio's down. Okay. Ooh. My friend's at the Atlanta airport. She works for Delta, and she's showing me the new planes that are rolling out today. Sweet. Okay. I'm out of here. You guys have a great day. I will see you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.